Welcome to our weekly investment update on Friday the 15th of May. My name's Chris Marshall. I'm Head of Investment Strategy here at Dragon Investment Managers. And as we do on these weekly investment videos, it's nice just to look back over the last few trading sessions, really pull out some of the salient points and headlines and data points from markets that we've seen going on, as well as give a stance on some of the things that we see going forward. So let's have a quick summary of markets over the past few trading sessions since we kind of closed out last week. We've seen global equities trade down about 2%. European equities have fared a little bit worse, down about 4.5% on aggregate as we head into Friday's trading session. And markets are really kind of still in this risk-off mood, trading in quite a negative sentiment of channel. And we can see that through a lot of surveys, as well as the differentials between equities and something like a risk-off asset like gold or treasuries. So why are markets kind of pausing at this point in time? We of course saw that quick rally up from March 23rd, which was really fueled by a lot of policy action from both central banks and governments. And it wasn't entirely irrational. That was based on kind of the central banks taking out liquidity risk in the marketplace, which was an issue in the fire sales that we saw between the middle of February and last week in March. So equity markets have kind of taken this pause, and it's really the point that we've been talking about for the past few weeks, where all these policies have been issued, and they're rightly so, they've been very aggressive and fast, because on the other hand you've got governments stopping all economic and social activity, but now becomes that pause period, that really kind of reassessing, well actually what's happening in the real economy, and is that what we were expecting in pricing into markets. So let's have a quick little look around some of the economic data. Within the UK, of course, we saw that really negative GDP print, minus 5.8%. It wasn't as bad as expectations. That was minus 7.2%, but really those expectations were probably a lot of guesswork and assumptions going on there, just because vast swathes of the economy aren't even open to get those kind of forward-looking assumptions that economists are so used to having. If we look at kind of what then happened with Bank of England, so they came out with a report saying that actually they now see the contraction across 2020 of being 14%, which is an extraordinarily high number, and far higher than the kind of the estimate that we saw in the latter part of April from IMF, which gave UK this pretty poor report of minus 6.5% as they saw it. So why are we seeing this massive difference? Well, this is really the realization that lockdowns are going to be a far slower process of reopening. And this really brings us into some of the US data that we see. So unemployment, initial jobless claims is still going at a very, very high pace. In fact, they're still at more than record paces pre-pandemic. So we saw another 3 million initial jobless claims this week, which brings it up to about 36 million across the 8-week period. And the fear here is just, well, what will this look like in several months? Will there still be a residual amount of unemployment in the system? Or will, as hopes have been all along, we will see a very quick retake up of workers and put them back into productivity and work and really start the economy going again. As we saw Jay Powell step out, they actually came out with a report, the US Fed, which signalled that actually where the job losses are coming from is the lower wage sector of the economy, that demographic, and their report suggested that households with less than $40,000 per year had actually seen 40% of them had lost jobs in March, which really just kind of plays into some of the stresses and strains that the economy is actually seeing. So while undoubtedly the measures that fiscal policy and central banking have had, easing liquidity and keeping the financial system flowing, there are, of course, real economic issues which are still in the market, and why the market is remaining in this negative channel of sentiment, and why it's taking this pause to really decide, well, does fiscal policy and central banking policy save us for the day, or does the economic reality actually catch up with this, and this all really centres on how quickly economies reopen. So with that segue, let's have a little look at considering what's happening in the reopening of economies. We have seen gold trading higher. This gives us a signal that this negative sentiment is still there and still present in markets. Perhaps that's trading a little bit more off some of the heightened geopolitical risks between US and China. But on the positive side, we've seen oil now rebound. It's trading about $28 a barrel at the moment at the time of recording this, and that's the highest point we've seen since 3rd of April. And this is really off the back of both Chinese, the certainly production side of the Chinese economy coming back online, and reopenings having effect of more demand for oil, as well as those supply cuts coming through from some very broad-reaching supply cuts from a lot of the oil-producing nations. So with this, it kind of tells the story of what's going on within the UK. Of course, we saw Prime Minister Boris Johnson step out Sunday night last week and just start to really tentatively start to ease those lockdowns. First careful steps, I think, was the phrase he used, and they were very careful steps indeed. If we look to Europe, again, we've seen a lot of countries there starting to try and ease lockdowns. So we've seen Germany and Italy. Austria are one of the first of the European countries to actually start lifting lockdown restrictions. And while all these are going on, we are starting to see some green shoots come through from the economy, but the caveat is they are green shoots from a very, very low point in economic data series. If we turn our attention to the US, again, when we look to the map, the state map, it's very pleasing to see that we are continuing to see states reopen. The majority of states are now either in a state of already easing lockdowns, or they plan to do so in the next few days. There are just now a handful of states who have not issued any guidance on how they are going to reopen or a date for when that might happen. So we're in this position of where central banking policy and fiscal policy from the lawmakers is trying to maintain this state of suspended animation, and this will all ease the level of atrophy in the economy. But it's really just how much of that atrophy comes through and how quickly we can get the economy back online. So for us, and in how we're positioning portfolios for the last few weeks, we've been talking about keeping both a defensive stance within the portfolios, but also picking up risk where we think that's prudent, and that's allowed us to participate in the rallies from the lows of March 23rd, but also keeping back both cash from a defensive standpoint and allowing us to pick up opportunities as they arise, which we think might come through as these economic data points really keep coming thick and fast, as well as some of these warnings coming through from virologists and immunologists and their models just saying, well, we have to be careful about second wave fears, which is likely, given the current policy stance by governments, to really, again, slow that process of opening back up. I feel that our portfolios are well placed for either the scenario of a fast reinflation if we do see the green light, and also protecting our clients on the downside if unfortunately we start to see those financial markets tumble once more. So this kind of summarises where we're up to and some of the things that we've been looking at. Overall, as I said, I think our portfolios are well placed, and it's nice to look back on certainly March figures and April figures, and just see how we performed in comparison to our peers, which was very favourable. So the strategies that we are implementing seem to be working. So that's another weekly investment update for Friday the 15th of May. So from myself and all of us at Dragon, I wish you a very healthy and happy weekend, and we will hopefully see you again next week.